Thank you for choosing to watch this video. For more videos on the latest stock market news updates, go press the like button and subscribe. With that being said, let's dive straight into today's stories. Investors are currently anxious about the potential economic repercussions of rising interest rates and the potential expansion of the Israel-Hamas conflict to new areas. Currently, the stock market is on course to record its third consecutive month of losses, marking the longest monthly losing streak since the initial outbreak of COVID in 2020. The World Bank has warned that a significant escalation of the Israel-Hamas conflict extending into a broader Middle East conflict could lead to a substantial surge in oil prices, potentially as high as 75%. Despite the conflict between Israel and Hamas that began on October 7th, energy prices have, for the most part, remained stable. Economists and policymakers have been closely monitoring the situation, analyzing past conflicts in the region to gauge the potential economic impact if the current conflict intensifies and spreads throughout the Middle East. The World Bank's recent study indicates that such a crisis could coincide with energy market disruptions already caused by Russia's war in Ukraine, exacerbating economic consequences. The World Bank's chief economist and senior vice president for development economics pointed out that the latest conflict in the Middle East comes on the heels of the biggest shock to commodity markets since the 1970s. If the conflict were to escalate, the global economy would face a dual energy shock for the first time in decades, not just from the war in Ukraine, but also from the Middle East. The World Bank projects that global oil prices, currently hovering around $85 per barrel, will average $90 per barrel this quarter. Previously, the organization had anticipated a decline in prices for the following year, but disruptions to oil supplies could significantly alter those forecasts. In the worst-case scenario, similar to the 1973 Arab oil embargo during the Arab-Israeli War, a severe disruption could remove up to 8 million barrels of oil per day from the market, sending prices as high as $157 per barrel. A less severe but still disruptive outcome, akin to the 2003 war in Iraq, could reduce oil supply by 5 million barrels per day and push prices up by as much as 35%, reaching $121 a barrel. A more modest scenario, resembling the 2011 civil war in Libya, could result in a loss of 2 million barrels per day in global oil markets, with prices rising by as much as 13%, reaching $102 per barrel. World Bank officials have cautioned that the impact on inflation and the global economy will depend on the duration of the conflict and how long oil prices remain elevated. If higher oil prices persist, it could lead to increased prices for food, industrial metals, and gold. Efforts by the United States and Europe to prevent a spike in global oil prices following Russia's invasion of Ukraine have included imposing a price cap on Russia's energy exports to limit Moscow's oil revenues while maintaining oil supply. Additionally, the Biden administration has utilized the Strategic Petroleum Reserve to alleviate oil price pressures. There is potential for further releases from this emergency stockpile of crude oil stored in underground salt caverns near the Gulf of Mexico, as President Biden considers authorizing additional releases. Notably, the Biden administration has downplayed concerns about the economic impact of the conflict, stating that it is too early to predict the consequences. To echo this sentiment, Treasury Secretary Janet L. Yellen emphasized that oil prices have remained relatively stable, and there are no immediate signs of the conflict having widespread global economic repercussions. In other news, Apple, a leading consumer electronics company, has faced 3 consecutive quarters of declining sales, which has had an impact on Apple's stock performance. The release of the iPhone 15 series is expected to boost the company's growth prospects. However, potential investors may be pondering whether AAPL stock is currently a wise investment. Apple, headquartered in Cupertino, California, unveiled its iPhone 15 lineup during a media event on September 12th, alongside the introduction of its Apple Watch Series 9. The product launch was mostly uneventful, as much of the information had already been leaked before the event. On the day of the product introduction, Apple stock experienced a 1.7% decline. The iPhone 15 lineup comprises 4 versions, 2 standard models and 2 high-end Pro models. The premium models come with significant new features, including an upgraded processor and a redesigned build with a titanium frame and customizable action button. The top-tier model, which is the iPhone 15 Pro Max, boasts a 5x optical zoom camera equipped with a tetraprism lens. These new smartphones became available for purchase on September 22nd. As Apple's iPhone business matures, investors are seeking the next major growth driver for Apple stock. 2 areas that have recently bolstered Apple's sales and profits are services and wearables. In the June quarter, Apple's services revenue saw an 8.2% year-over-year increase, reaching $21.21 billion, while hardware sales declined by 4.4% to $60.58 billion. In addition to the services sector, Apple's wearables, home, and accessories unit recorded a 2% sales increase to $8.28 billion in the June quarter. This category includes wearables like the Apple Watch, AirPods wireless earbuds, and Beats headphones, as well as the Apple HomePod wireless speaker and other miscellaneous gadgets. Apple has ventured into the wearables market with the introduction of its long-anticipated Apple Vision Pro mixed reality headset on June 5th. This innovative device combines virtual and augmented reality and is slated for release in early 2024 with a price tag of $3,499. The headset is designed for various applications, including entertainment, communications, and productivity, and it uses video pass-through technology to integrate the real world into virtual and augmented reality experiences. Overall, Apple's financial performance has been mixed. In its fiscal third quarter, the company exceeded Wall Street's earnings expectations but matched sales forecasts. However, its outlook for the current quarter was weaker than expected, leading to a 4.8% decline in Apple stock in the subsequent trading session. You should also know that the next earnings report for Apple is scheduled for November 2nd, which could influence the performance of Apple stock. So if you are an Apple stock investor, then get ready for some volatility. Next up in today's stock news, we have Meta Platforms, which is the parent company of Facebook. This company has recently announced plans to offer users in Europe a subscription option that allows them to use Facebook and Instagram without advertisements, in compliance with European Union regulations. The monthly subscription plans for users in the EU, European Economic Area, and Switzerland will be priced at €9.99 for web users and €12.99 per month for iOS and Android users. These regulations could limit Meta's ability to personalize ads for users without their consent and affect its primary revenue source. Meta has faced antitrust pressure in the EU, and it recently lost a legal battle against a German data protection order. By providing users with a choice between a free, ad-supported plan and a paid, ad-free subscription, Meta aims to navigate regulatory challenges without substantially impacting its ad-based business model. Meta was previously fined €390 million by Ireland's Data Privacy Commissioner and was prohibited from using the so-called contract as a legal basis for sending users ads based on their online activity. The company has since stated its intention to seek users' consent in the EU before allowing businesses to target ads, aligning with evolving regulatory requirements in the region. Lastly, Stellantis, the owner of Chrysler, has become the second Detroit automaker, following Ford, to reach a preliminary agreement with the United Auto Workers Union after a 6-week strike. This agreement, similar to the one with Ford, is reported to include a 25% pay increase for full-time employees and cost of living allowances. However, the union has expanded its strike to General Motors plants, as negotiations are ongoing regarding temporary workers, who can make up to 10% of GM's workforce, according to Bloomberg. For more videos on the latest stock news, remember to press the like button and subscribe. With that being said, I wish you the best of luck and happy investing.